I'm David Maris. We have Bob Morris. We have Kevin Bakes Baker. We're going to talk about the high-end traveler. We're going to talk about 3D printing. We're going to talk about whether there's peace ahead or uncertainty. Well, there's certainly uncertainty in the Middle East, but Bob will tell us what to do with oil and gas stocks right now. So, but let's first talk about the high-end traveler, Kevin. Are they back? Have they never left? I think you look at some of the cruise stocks and maybe they're not, it looks a little rough sailing if you get that great pun there. What do you make of the high-end traveler? Is there any way to play it?
I was a little bit surprised given how bad Royal Caribbean and Norwegian cruise looks, but this is Viking Holdings, the high end, no kids, no casino, uh, uh, you know boat travel company, and apparently there are no wars and no oil shocks wherever these people are sailing, and so I mean this is just a pretty chart. There's a new CEO. I don't know anything about him, but the old CEO obviously did a pretty great job, and this is impressive. So the one percenters are doing great. The other 99 maybe not so much, but Viking Holdings is. I'm surprised that it's acting this well. It's a little bit analogous to Lifetime Fitness versus Planet Fitness. Obviously, a very different price point, but people lament the K-shaped economy, but the upper end of the K is looking great, and that's certainly the case of Viking Holdings VIK.
Yeah, I'm not so sure the Vikings the 1%, maybe the 10 or 20%, right?
Whatever you pick a
It's
number.
a higher end
I was looking for
traveler.
clickbait. I
It's
wanted to enrage some people to have them watch
the
the show.
1% continues cruising. All right, we got it. Create the outrage. It's actually interesting because I think United Airlines and American Airlines CEOs yesterday, the day before, came out and said, "Look, the business traveler and the traveler seems to be looking great." So don't tell that to Spirit Airlines, but the others are saying things look fine. All right, so we're there on Viking. Maybe they only do river cruises and they only go downstream, so they don't have to worry about
Mm,
oil and gas.
That's a business model. I like it. I like it.
We
They
flipped
eventually
it
got
up.
to go back up, though.
Yeah, but they do it circular. They tow like five of them up at a time. All right. Let's talk about 3D printing. Maybe the Viking 3D prints their boats. What's going on with 3D
Yeah,
printing?
and
I've not heard anyone be excited about 3D printing since like high school STEM class. For my kids.
it was. I had to look it up. It was 2013, 2012, 2013, and there was a lot of excitement over this, and then it died. And the traditional manufacturing is dead. Well, 3D printing. Look at this chart. And Dentsply X-ray XRAY is the number one name. Autodesk is number two. Siemens is at number three or four. I forget which. But I mean, this is a clearly positive chart. And again, I'm surprised by this. I haven't heard anybody talk about it anywhere since 2013. And this is positive. I have not bought it yet. Full disclosure, I'm doing some work, but I'm very intrigued. The volume is doing exactly what I want to see. Rising on above average volume. Over double, and I'm just I like when I find things where I thought they were dead, and now they're exhumed, and so this is being exhumed. You can see the price history back in my chart doesn't even go back to 2013 because they were too slow to launch the ETF back then, but you get the idea, and that's a base, and we're breaking out of a base, so stay tuned. If I buy it, I'll let you know, but I'm very curious about this phenomenon and if it has legs.
All right. So I also saw another ticker that you had sent over. YPF. What is that? I don't
Well,
even.
when I'm on with Bob, I try to find things that are oil and gas related, and it's a name that I don't think we've talked about. It's big in the Argentina ETF that I used to own. Made some money on it, but not, nothing heroic. I'm no longer there. But this is YPF, the state-owned oil company of Argentina, and it's clearly breaking out. I mean, you can see that line right there from I guess, the 2024 high, and we're taking out. Now, oil prices are up, so we ought to. But my suspicion is this is a name that is not on people's radar screens. People have not pulled it off the shelf like they have Schlumberger, SLB, and Exxon. And I'm just intrigued. And I don't know, Bob, if you have any thoughts here, but that's clearly a stock breaking out of multi-year highs. And I think there might be a reform deregulation story in Argentina that's also impacting the state-owned oil company. I'm kind of ambushing you here, but any thoughts here?
Yeah, I need to go back and take a look at it. We've mentioned that before on your chart. I know in the past it's popped up as something interesting, and it's not one I've had on my radar screen just because for my screening it doesn't pay a big dividend. But clearly there's a benefit from the oil price here, and in a name that's probably overlooked by a lot. So I'll go back and take a look at it. But that chart is impressive on the name here. But I haven't dug deep into it to look at the fundamentals, other than it is leveraged to the oil price here. So,
and my guess is I probably mentioned around here when this first breakout at 40, but that's okay. A breakout is a breakout, and the buying pressure is pretty intense. And Bob, let me ask you this, but while I have you here, what would make you sell the oil and gas names, or any oil and gas name? What's the trigger that says, okay, we've had enough here, I'm gone?
I mean, it would take a lot. It would take a situation where we know there's a clear path to oil prices retreating pretty significantly. And that scenario is nowhere near at hand, in my opinion. But you'd have a situation where, the current administration's dream scenario of Iran says, okay, come in, take all of our enriched uranium. We'll never enrich again. We're not going to have a nuclear bomb. And by the way, we're backing off of the Strait of Hormuz, and there can be a coalition that controls it, not us. And oil starts flowing, and all of a sudden there's just extreme peace, which I don't see the case anytime soon. But I think to sell these names, I'd have to make a case that oil is going to pull back to $70, $60 a barrel, which I just don't see a scenario for that anytime soon.
I appreciate it. Thanks.
Yeah, I mean, I'm not selling anything here. I don't know if you want to jump into it, or David, if you want to continue with some questions or things.
No, I think it's a great segue into what should we be doing. I mean, I know overnight we threw a couple more missiles here and there, and they did the same. Is it breaking down and we're going to go back above 100, or is it?
Well, there's a lot of uncertainty as to what's going on here. It's not clear to anybody who's in charge in Iran, who's calling the shots, and who the U.S. is supposedly negotiating with. And that on the one hand, you'll hear Trump say, we're very close to a deal, we're very close to a deal. And then the rumors and reports, even though the White House won't release any details on what the supposed deal is, you'll hear rumors that, Iran's going to give up their right to enrich uranium, and they're going to open up the Strait of Hormuz. And then you get last night, one of these Iranian officials posting on X that the red lines are control of the Strait of Hormuz, their right to enrich uranium and keep their enriched uranium. So they're polar opposites as to what one side is saying versus the other. And I think part of what is definitely going on is there are different factions within Iran trying to grab the upper hand as to who's calling the shots and who's in charge there. And I think there probably is one faction that's wanting to negotiate a deal that may be more along the lines of what the administration has been sort of indicating or flagging. And then there's another faction that's out there just taking the other extreme, saying, no, we're going to throw up that we're not going to do anything, give up anything. And we want to retain our right to nuclear enrichment. We want to retain our control over the Strait of Hormuz. And we have yet to see any deal come out. And it's interesting because there was a point more than a week ago that Trump had continued to indicate, look, if there's no deal at hand within this time period, then the bombs will fly. Well, we passed those time periods and no bombs have flown, and he continues to say that we're very close to a deal. So we'll see what happens here. I don't think this is an easy solution. I think if anything, what they're heading toward is negotiating an MOU or memorandum of understanding of what this is what's going to happen. And then let's take another 30, 60 days to actually negotiate the details of what we think we're going to agree to here as to what the situation or deal is going to be. So in the meantime, yes, the U.S. is shooting down drones over the Strait of Hormuz. They've done these defensive attacks within Iran. And so this ceasefire seems to be somewhat fragile. But Iran still, on the one hand, they're sort of succeeding in their strategy that we laid out they were going to take to begin with, which is stall, 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 hoping that at some point Trump hits a political roadblock in USA, whether that's taking away his war powers or whatever, or he's going to hit political roadblock in the Middle East where other countries say, look, don't bomb, don't send the bombs, and we're sort of close, we're still talking, just, hold off on sending in the troops. And my thought too is on this MOU, if it's a memorandum of understanding and they continue to delay on that, are they trying to push things out even to the midterms?
I was just going there. Thanks.
Where then Trump loses all power control to unleash the military fury on Iran, and then they do win in the sense that then they've got a much stronger negotiating position. At the same time, inventories in the U.S. continue to be drawn down. Yesterday, crude inventories, gasoline inventories continue to be drawn down. On the one hand, the reports are, well, gasoline inventories are being drawn down because of strong demand, but at the same time, the oil's not flowing and inventories are getting drawn down. We continue to pull oil from the SPR. Other OPEC nations have not stepped up to say they're going to increase output yet, but you could be, a month or two away from inventories in the U.S. being drawn down to critical levels, to where then it becomes a much, much bigger concern as to inventory levels and what then prices at the pump do. So, the longer that Iran can stall and push this out, the more advantaged they gain in that stall game that they continue to play here. And in the meantime, the Trump administration is trying to nail down a deal of any sort, whether it's MOU, at least that's some deal, to try and open up the Strait of Hormuz. But even then, if they said today, look, we've got a deal or an MOU to open up the Strait of Hormuz, I still think it's another month before everything sort of settles and the parts and the pieces move to where you see oil freely flowing through the Strait of Hormuz in the best case scenario. So when it comes to the stocks, and we're sitting here, oil's bouncing back up a little bit today, I'm not selling anything. I'm holding on. And there's too much uncertainty. I said before the range on the oil price where, if we had a peace deal and things sort of played out, every way, positively, downside was 80. I look out to January of next year, the futures around 76. And I said, on the other hand, if all hell breaks loose, the upside is 120. So I'm not, it's down here around 92 because of optimism that, gee, maybe there is a deal. Maybe we are making progress, which it's hard to tell. But I'm not selling anything. I'm holding on. At $90 oil, I want to own these names. If 90 or even 80 is where we're going to be, I still want to own the names that I own. I'm not selling anything here.
Okay, so CNQ's printing money at $70, $80 or $80 at least.
Yeah, they're printing money. Remember, in their oil sands operations, their operating cost is under $20 a barrel. These guys are minting money. Yes, they're minting money.
Yeah, higher.
Exxons and Chevrons are doing super well here too. So I'm holding on. I'm not writing any covered calls. I'm not selling anything. I'm just sort of, I've got the bag of popcorn. I'm watching here what's going to happen.
Look at those, Kevin. They're riding the wave. They're right in the curl, like a surfer. They're in the tube there. They're just right in the middle, right? That's the place we want to be, right, Kevin?
Yeah, no, it's consolidating at a higher base, and it's exactly what you want to see. And I think it's in keeping with Bob's 80 to 120 band. Here we are at 96, and C&Q as an example is right in the middle of that of its range. 51 on the high side, 42 on the low side, right in the middle. So makes sense.
What I think is interesting is that you had yesterday the president say, to your point about the midterms of whether or not there's a ticking clock to get, and he said, I don't care at all about the midterms, which is great for a second-term president. But at the same time, on Truth Social, he's talking about every win that he has for the elections or for the runoffs that have been taking place. Of like, look, this wins. So he clearly cares about the midterms, but he's trying to project to Iran that he doesn't. So, well, let's talk now last about TDOC. Kevin, I need to know what this chart tells you, because when I wrote it up, and I don't write up everything, but I said, look, here's a turnaround story, and in one account I'm up 24%, on another account up 27%. So one of the two is where I wrote about it. I think it still has a long way to go, but what says you on this very, very hard to discern, is it alive or not chart?
No, it is alive, and it's a knife that's on the floor. And my tiebreaker with fallen knives, I think this is a fair description. From its, my guess is that this is a Kathy Woodstock back here in the COVID days, and it's so far up, it's literally off the chart. I got to change the scale in order to see it top out at what, $200, something like that.
It's like, it was so great because it was telemedicine during COVID.
Right.
And now that everyone's moved to AI, this telemedicine company's fallen by, and they've also completely underperformed. So, I mean, operationally, not just the stock with, operationally, they've had lots of problems.
So here we are. We've spent, a year and a little over a year in this 5 to 10 range, if you will. Here we are at 7, let's call it. But what I like is this volume appearing on the earnings days and then following through. You see the earnings spikes here on the 2 reports ago, and you can just look at this. You see more blue than pink down here. That means it's under accumulation. That's what it means to me, at least. And I don't care if it's a computer or an algorithm or a person. Someone has to program these things. And it's buying no matter how you slice it. Same thing happened on the last earnings report. And, this looks like it's basing. The 200-day is still going down, but at a much lesser rate. I think it's going to turn to the upside, just eyeballing this. And if you take out 739, which isn't that far away, I think you've got a change in trend, especially if it happens on the volume that I think it will, which is over 150% of average daily volume. So, I'm encouraged, and I think this is one of those names that you see. It's the 3D printing of healthcare. Why are we talking about TDOC? Isn't that Kathy Woodstock that's dead? I think it's being exhumed.
Well, I think so. If we talk about some of the holders list changes, and I've always had mixed feelings about holders list changes. First, they're always backward looking, so you don't know what people really are doing, unless you subscribe to kind of more expensive real-time changes where especially issuers pay for those to see who's really buying and not. But if we look at the top 10 holders, one of the new ones is, or increases, is 0.72. Sixth largest holder increased their stake by 36%. All the others are kind of in the mid, not so much, but Allianz. So you have 0.72, a hedge fund. Then you have Allianz, a giant mutual fund or asset fund, group of funds. They increased their stake by 53%. So you only have two declines, one by 1.9%. Vanguard, which is probably index focused, as the largest holder, that went down 2%. Dimensional fund down 16%, but still in the top 10. But it gets interesting on the next 10, because you have a couple that are they're names that most people aren't familiar with, even if you're an institutionally focused sell side analyst. Monaco Asset Management, Pale Fire Capital, Jupiter Asset Management. Folks that sometimes get involved in not so much activists, but turnarounds, actively involved in turnarounds. Not trying to say anything is going to happen there, but Monaco increased their position 100%, so they're the 12th largest holder. Pale Fire 74%, Man Group up 86%, Quantico. These are all names I'm not familiar with, but they're specialist funds. So I like to see American Century there, also 13th or 14th largest holder, increasing their stake. Why are most of these folks now? I could go to the very end and see who's been selling or who's sold out, but in the top 10, it doesn't look like of the top 10 holders. But that is a good point to look at the ones who've sold out. So we have Vola Ridge, never heard of them before. Union Square, never heard of them. Tang Capital, I have heard of before, and they're very, very smart. Sold out completely this past quarter. He is usually taking activist positions or collaborative positions. So Kevin Tang's really smart guy.
Okay, that's a name from the past.
Yeah, he's had a lot of hits, but maybe I'll reach out to him and see. But I think it's just a missed opportunity. Obviously, it's up another 25% since he's done it. So let's not. Maybe he was early to the second shoe falling, but or second knife falling. But so that's just kind of the holders list. It's also sometimes looking at tea leaves. You never know. There are funds that are super smart in general, but all of them make mistakes, right? So to point at 0.72, which is amazing at what they do, but to say, okay, well, they increased that's the reason it's going to go up. Who knows? They're wrong 48% of the time, or whatever they say they are. So I don't want to hold on to more than what my actual work is. My work seems to show, you know what, things are slowly turning around here, and the new CEO who's been in place for a year and a half seems to have a good handle on it. But don't want to spend too much time on a small cap name, but I thought I'd just update it and take a little mini victory lap. So.
Real quick, is BetterHelp being shut down, and is that part of the catalyst, or?
No, they're trying to turn it around and slowly, spend a little bit less on it. They won't. I can't imagine they're going to shut it down. They could end up selling it or partnering with somebody, but I laid out in my written work that in general, there are three things that usually happen in a situation like this. They either turn it around, they sell it, or they partner with somebody. And so they could do one of those three things. And he seemed to be pretty aware of his options. And, the trend looks a little bit better. I won't say it looks a lot better, but for that part of the business, the institutional business is doing really well, but the BetterHelp part isn't. So, well, with that,
they were advertising on virtually every podcast that I listened to, and then they went radio silent. So I figured something like you described was going on.
Yeah, it's a really expensive business model, right? To always be paying for influencers to get volume. And so what they've started to move to is an insurance covered model. So people can use insurance. It's not just a cash pay model. And the people who are using insurance now stay longer, and the average pay is a little bit higher, not a lot higher, but a little bit higher. So that helps with your customer acquisition cost. So, but we're already 25 minutes into this, and we are going to call it a day. It is May 28th. For Bob Morris, Kevin Bakes Baker, I'm David Maris. We'll see you next time on Wall Street Beats. Go to wallstreetbeats.com to get all that written work that I was talking about, all the secret chat that we have about stocks that are moving day to day, and even our own victory laps and failures that we talk about. Luckily, there are more victory laps than failures, but
Amen.
But we talk about both. So have a great day, everybody. Talk to you soon.
Thank you, everybody.